Hello and welcome everyone to episode 16 of the Nord Search podcast. Going to do a different type of podcast today. I'm interested to do a bit more analysis on the power market this year. So I'm delighted to be joined by Silvia Messa, who is head of analysis of Continental Europe at Volue. So Silvia, thanks for joining me today.
Hi, nice to see you, Patrick, and thanks for having me. And hi to everyone who is listening.
Thank you. It's great to have you on. I think, as always, as we start the podcast, for people who don't know you, Silvia, could you give an overview of you, your background, and what you're responsible for at Volue? That'd be great.
Yeah, my name is Silvia. I have been around in the energy market now for 24 years, I recognize. And I come from Milan. So the start of my career was there in a couple of utilities in the early 2000. Then I moved to Germany in 2007. I worked for Statkraft for almost 13 years. Major focus of my career has been on the trading floor around the cross-border activities, let's say in continental areas. And then I moved to Volue 4.5 years ago. Today, I lead the team of the Continental analysis, so analysis for Continental Europe. Yeah, we have prepared quite some data and charts and slides that we would like to share with you today.
Awesome. Thanks for that. So just to confirm then, on the analysis that you guys do in your team, is that power and gas? Like what's your main focus?
Inside by Volue, which is the company I work for, there are analyses for different fundamentals. So everything that impacted the gas and the power market. But in my very team, we focus on power mainly. So the fuels and carbon, of course, are very important, as well as all the different drivers, the different fundamentals. But we focus mainly on power. And in Insight, we have major focus, let's say, in the Scandinavia area, because Volue is a Norwegian company, in fact. But we do focus also on the world continent. And we started also a couple of years ago to focus also on Japan.
Yeah, awesome. Very interesting. Well, as I'm sure you agree, it's been a very exciting, interesting, volatile market the last few years on the power side. Obviously, lots of fundamental reasons for that. So what I'd like to do, and I think probably would be beneficial for the audience, is to just give a bit of a review of 2024, like what we've seen in the summer months on the power side in continental Europe. And then once we've covered that, I think what would be interesting would be what the outlook is going into the winter months as well. I think that would be interesting. I know you guys have been working hard on getting some data that you'd like to share with us. So that would be really cool to discuss.
Yeah, data is the new commodity, as they say. So definitely it's all about that. And if you don't mind, I start to share my screen.
Yeah.
1 second. So that I can show to those that are also watching the podcast some slides. For the others, I will make sure to explain as much as possible the numbers and the figures that we are looking at together in the slides. So let's say, speaking about 2024 so far, and today is the 11th of September, we put together basically some overview of what has happened till the end of August, plus, let's say, the prognosis that we have at the moment in our system for the rest of the year. And first of all, we start with this slide where we show basically the power balance for Europe in total. So this is not only continental Europe, but is the whole continental Europe plus Turkey and plus UK and the Nordics. So it's really everything. And the major trend that we see here is are still about basically stagnating consumption, let's say like that. So we see year on year compared to 2023, the current 2024 still shows, let's say, lower demand in terms of power for all these areas, around 72 terawatt hours. On top, let's say, we did observe this year very healthy output, especially from the French nuclear fleet. So we see roughly 41 terawatt hour more nuclear production all in Europe in 2024. Hydro was exceptionally good this year, plus also given the increase in installations in wind and solar SPV, we see also almost 112 terawatt hour increase in renewable injection. This basically led to, yes?
No, I was just saying it looks like the real energy transition this year when you see those kind of data points where the increase in the wind, the solar, the hydro. It's great to see.
Yeah, definitely. In fact, we called this slide the decarbonization of the power balance in 2024. Definitely, it looks like Europe is on the right path, let's say like that. Basically, the combined effect of lower consumption and healthy renewable and nuclear basically allowed for a decrease in thermal generation from lignite, coal, and gas by 140 terawatt hour year on year. So definitely we are on the right track, let's say like that.
Yeah, yeah. And just there is people who perhaps aren't as familiar with the reasons behind this. So for me, I'm not an expert, but I'm looking at this and I see consumption is way down. Like, what's the potential reason for that?
Yeah, for consumption, if you allow me, I jump to a different slide. I also have a slide with our latest update. We have been keeping on observing and shaving, let's say, like that consumption over the past 18, 24 months, because after the energy crisis in 2022, we were expecting already during 2023 a fast recovery, let's say like that, which in fact hasn't happened even after the drop of gas and power prices. Different situations all over Europe, so you will not see the same trends in every country. But definitely what is still quite interesting is observing the energy intensive industries in Germany. In the charts that I put here that we got from the studies, we show basically the trend for industrial production in Germany. And here on these top left charts, we have in the blue line the index for industrial production all in all in Germany, taking basically 100 as a reference the year 2015. We can see how not simply the economy, but the industrial production has been developing over the past 15 years, basically, right? We see the dip here during Corona, and then we see the impact during 2023 of high gas prices, basically impacting the overall industrial production. The red line instead represented the energy intensive sectors, which are just few, but are the metal production, chemical production, glass, ceramic, caulking and oil refining, and paper production. And we see that this has basically been affected much more than the total industrial production in Germany since basically the beginning of the war with Ukraine. And with the beginning of 2024, we have been observing a rebound, let's say like that, but we are still very much below compared to the pre-crisis level. So we are still around 85 on this index that has 100, the level of 2015. So especially the chemical sector is still lacking behind, let's say like that, and we are observing the situation. But all in all, we did reduce, let's say, our expectation in terms of power demand for the next 3-4 years. First, because of this, because we don't see the energy intensive industries picking up at the pace that we were expecting in Europe and specifically in Germany. And because the expectation in terms of new EV and electrolyzers has kind of be delayed, let's say like that. So we were assuming a stronger power consumption due mainly to the new EV autos that we could have had around Europe, but we recognize now, checking the numbers of sales, that we were probably too optimistic, and there is a slower pace than what we were expecting.
Okay, no, that's interesting to see. It looks quite drastic when you see the chart of the consumption levels. So you're going into like the summer months. We'll go into that, but you don't expect the consumption to go back in next year into the levels that we were seeing pre-crisis.
Not yet. We have lowered now our expectation, and we see definitely a slower and also lower increase, let's say, going toward the end of the decade. Yes, I will show you basically the development of the prices, speaking about the trends that we have been observing for 2024. So in this slide, we present with different colors, basically, what for us is kind of continental Europe. So all the core area, plus Iberia and Italy in total. There is the UK, which is also part of our focus, but in this case, we focused only on these countries. And basically, every chart represents the baseload average, and the colors basically represent the levels, right? So we see that we started March and April with two very significant, very, very low delivery in the Iberian markets, impacting also the French markets. And this phenomenon also continued during May and also the beginning of June. Reasons for that is that we said consumption is not up to the pre-crisis level yet. Especially in Iberia, we have been observing prices collapsing between March and May very often towards zero in an incredible numbers of hours, towards zero or €1 level. This has made basically the total price level in Iberia very weak, and determined also basically the flip of the cross-border exchanges with France. So basically, Spain became very often a net exporter, depending on the hours, of course, but toward France. France, which has also been weak due to the very healthy production of the French nukes, due to a very healthy hydro fleet also, not only in France itself, but in the Alpine region in total, basically has also got all the power in import from Spain, and basically had been, let's say, obliged kind of to reduce the flows toward the so-called eastern border. So we all heard a lot about the discussion around RTE, the French TSO, reducing the NTC, so the net transfer capacities between France and Italy North and France and Switzerland. And plus, during April and May, we have also observed analyzing in depth the data of the flow-based market coupling, also severe reduction, totaling more or less 1 gigawatt also on the border between France and Germany. Yeah, severe reductions also on the borders with Germany and with Belgium. So in total, basically, France during this month, March, April, and May, got very healthy supply, more power coming from Iberia, and less export capability toward the so-called eastern borders. And all of this basically dropped the prices of this side of Europe. And the second major trend that we observed during 2024, especially during the summer, has been characterizing basically the east of Europe, both the center eastern side and the center and the southeast side, which delivered much above the rest of Europe. In fact, here in these charts, we see that during July, prices were very high, especially in Hungary and Romania. And in August, a similar picture with Italy also, that is more or less at the same level, basically. And the reasons for the tight situation in the east are multiple. One is definitely related to the heat wave, the increase in consumption due to exceptional hot weather during the summer. That has also impacted the output and the efficiency of conventional power plants that were not able to produce as much as normal and with the same efficiency that normally they would have with with lower temperatures. And another major phenomenon that we have been observing was determined by the increasing export from Slovakia, Hungary, and Romania toward Ukraine. So basically, recapping what we have seen this year, let's say like that, this major trend of a quite healthy supply, especially in France, due to a very relaxed situation of the French nukes, and the tight situation also determined by the pull from Ukraine versus the east of Europe, are two trends that we can expect possibly continuing also in the next 12, 18 months. About the French nukes, the last target of the production published by EDF shows healthy numbers also for 2025 and the rest of 2024. So we don't have reasons to doubt that the situation will remain relaxed, let's say like that. And when we look at the pull from Ukraine, well, there are different factors that we will need to consider. We do expect, especially when looking at the coming winter, Ukraine being in need of extra power due to the severe damage of huge chunk of roughly 60% of the power plants since the beginning of this year, and damage also of some of the neurologic lines in the country. So definitely the need of Ukraine to import possibly more and more from Europe is there. How much that will be possible will depend also on the status of the infrastructure. I want to jump now to another slide that can help to understand the phenomenon I'm speaking about.
More on the focus on Ukraine and the impact moving into the summer.
Exactly. Now I'm showing here the monthly import and export for Ukraine versus all its neighboring countries.
Yeah.
And basically, these charts show us that in 2020, there were still quite some balanced flows, let's say, with import into Ukraine from Slovakia, also from Russia, from Belarus. And after the start of the war, we see that basically there's hardly any import at all into Ukraine. And the country has started to export mainly toward the European countries. And the trend had been completely reverted in January 2023, where we see that the flows have been dropping terrifically. But during 2024, we see that Ukraine has started to import more and more from Hungary, Romania, partly also Moldova and Slovakia. So the question is whether this is something that will be sustained. We know that in total, these days, the maximum total capacities that is exportable from European countries toward Moldova and Ukraine is at the max of 1.7 gigawatt. In extreme condition, this limit could be increased up to almost 2 gigawatt, 1.9 gigawatt. But the question is whether this will be possible. We saw that after the attack of the Russians to several energy infrastructure during the 26th of August, the flows between Europe and Ukraine have been declining. And one of the reasons is that some of the lines on the Ukrainian side have not been able to sustain the import. We see these days that this situation is going basically to be reverted, and we all hope to enter the winter with almost the full capability of 1.7 gigawatt. But all in all, let's say the situation in Ukraine is definitely tight. We said already 60% of the production fleet has been destroyed. Due to the martial law, we in Europe don't have access to the information about how much is available in which locations, how is the status of the grid in the country. So we lack, let's say, a good outlook on what can happen. All in all, what we know is that maximum the European countries might export 1.7 gigawatt, at which pace depends on different conditions. The total maximum load could be reached in some of the tightest winter hours in Ukraine is, according to the latest news that we read, around 18 gigawatt. And the country has at the moment, let's say, rely on a production of roughly 7.5 gigawatt baseload of nukes. The rest has been covered by different kind of technologies and by import from the countries that are still able to flow toward Ukraine. And then basically different scenarios that have been run lately from different entities and authorities to monitor the situation of the coming winter for Ukraine, basically try to find out how many hours of load shedding we are going to experience depending on different kind of temperature and scenarios over the months to come. So this is the situation, and even though Europe seems all in all kind of quite relaxed, we have to consider that the geopolitics in Ukraine, in Russia, and all over the world are definitely impacting also the overall picture also for European countries.
Yeah. So the outlook then in the winter, just to summarize, what would you say is is going to be the outlook for continental Europe? Is it going to be similar to what we saw last winter, or is it going to look quite different in your opinion?
Well, as always here, let's say the answer depends on the different hypotheses that one put on the table. Let's say we have been facing most of the time quite mild winters over the past years. And if that is the case also for the winter 2024 and 2025, if the supply of LNG is healthy enough, if the French nukes will perform as they've been performing this year so far, so in a very reliable and good way, then yeah, let's say we don't see strong reasons for very big upside, let's say like that at the moment. But playing out with scenarios, let's say that the devil is in the details, because again, everything can happen. The European system still relies a lot also on the injection of renewables, and during winter there is also the possibility of this cold and windless period where then you have to run everything that you can. So let's say at the moment would be difficult giving you a, let's say, a simple answer. Depending on the scenarios, one could end up being pretty bearish or even bullish, depending on the different hypotheses that we could run in a model. All in all, I would say that there is a lot of risk that probably is only partly priced in the different markets, both the commodities, so the gas and coal market, and the power market. In general, let's say the main trend of stagnating economy, and therefore also lower than normal, let's say, or lower than the last decade consumption, is something that is going to stay. And the potential threat of more pull from the Ukraine side, from the eastern part of Europe, is also something that we think is going to stay, at least for the coming winter months.
Yeah, obviously no one can predict the weather, but yeah, the other fundamentals. Okay, thank you. That's very interesting. And so so the volatility, given the amount of renewables that we've got coming into the market and the unknown with what's going on geopolitically, the recent volatility is probably here to stay. Is that fair to say, or could it look differently?
Definitely. I mean, we look at volatility always in different horizon. Let's say on the very short term of the curve, meaning looking at the intraday and the balancing market, definitely what you say is a key that we think being the way also for the next years, meaning the more renewables that will be installed, the more the intraday and balancing markets will be volatile and will need extra optimization and extra coordination at European level. So already a lot of excellent initiative, like the very well-functioning intraday market now for all the SCDC area, and potentially revamp of the Picasso and Mari cooperation for the AFRR and MFRR. So I would expect that the volatility on the very short term will be different in every single market, but definitely is here to stay, I would say. On the forward, so in the future market, it depends a lot on what happens, right? Fuels are, of course, the main driver these days. The geopolitics, as you just said, as always, any news on something that is neuralgic will be crucial. But typically, let's say, compared to a couple of years ago, when we entered the winter in certain other different condition, this year, at least now that we are slightly before the beginning of October, so the next quarter and the next winter, let's say, we are in Europe in a very relaxed situation. Gas storages almost at max, hydro reservoirs in the Alpine area, and also in Iberia, very healthy. Consumption that is not very strong, healthy, nuclear generation. So far, let's say, at least on the supply side, we consider being on the safe side, I would say.
Yeah. Do you have data on like how much more renewables are coming into the market in the next 12 months? Is that data available, or is that not something that you guys have access to?
Yeah, I don't have here with me numbers, so I will not like to say something that probably is not so precise, but definitely the growth of installation in both SPV and wind is going to continue. Yes, it's something that we clearly see.
Yeah, I know you've not got the data, so I'm not going to ask you for specifics. Don't worry. But do you think it's going to be like a similar level to what we saw in 24, in 25, or unsure at this point?
I think it might be a similar level, yes. I wonder when, for investors, the situation of the current revenues, at least on the spot side, might drive a different decision in terms of investment. I mean, the situation in Spain, for example, is already pointing to something remarkable, but all over Europe, we have been observing an increasing number of hours delivering towards zero or below during the whole summer months, right? Especially in the PV hours. And this is something that most probably is going to continue. Of course, batteries are a great help on this side, but we don't see that they are going to change dramatically the impact on the injection of the PV very soon, at least not all over Europe. So in general, let's say we see at least the bearish trend, at least in those very hours, for the whole continental area. Often also coupling even to Scandinavia, and again, with the area being dominant in this price formation toward the zero level. So this is a phenomenon that we will see everywhere. Then one could also notice, like it happened already this year in some of the markets, that when this is the case, so in delivery, you see very low prices in the PV hours, then it could be that in the evening you need to switch on something and it might be extremely expensive. So the volatility also on hourly level, let's say like that, it might also increase even further, especially with the commissioning of some of the coal units or some of the oldest units in the fleet in Europe.
Okay, cool. Interesting. Yeah, so thanks for that, Silvia. That's really interesting looking at the outlook going into the winter, the all-important trading period of on intraday. That's where a lot of the volatility is. And I know the traders really, their year, starting the year in the winter is where the year's majority made. But going into something, a trend I've seen with my clients is a lot of focus, a lot of interest in the Japanese market. I'm seeing, quite a few firms set up in Singapore and new hubs to trade Japan. But I'm just interested in finding out a little bit more about the Japanese market, and there might be others that are feeling the same, that they've not quite made that move. It might be in their roadmap, it's on their radar, they're aware that it's an interesting market. But could you just give us an overview of the Japanese market, and why are trading houses looking at Japan right now, in your view?
Yeah, so we see exactly the same like you, meaning a lot of our major European customers have been moving over the past couple of years to the Japanese market. And probably some few reasons are on the back of this. One is that Japan now is still, let's say, not 100% mature market, meaning there is a lot going on, and probably the Japanese market in 5 years will look pretty different compared to what is now. And coming from Italy, I can tell you that time to time I have the impression when analyzing Japan that I'm looking at kind of the same dynamics that I was looking into the Italian market maybe 20 or 15 years ago. So the market is still kind of, from certain perspective, regulated, if you want, but there is an opening up, right? So the market is also getting more and more liquid. There are more and more investors and traders. So some dynamics have been changing, and they're going to change. Funny enough, we discussed with some of the predominant people in the EEX future market in Japan, and they told us that, for example, the major trader, at least till July, in the Japanese future market is Vattenfall. So it looks very interesting from our perspective. And basically, they told us that the market really start to open up when people arrive in the office in Hamburg. This is what we have been told, let's say like that.
Right.
But in general, let's say there are different reasons for why, different reasons that make Japan at the moment so interesting. First of all, beside coal, the major driver of power prices is gas, in this case JKM. And JKM these days is very much correlated to TTF, right? Because since the invasion of Ukraine, basically Europe as such, and particularly Germany and Italy, had to kind of move away from the Russian supply finding other sources, and basically the main replacement, or one of the main replacement, have been LNG, and LNG is a global market. So in fact, TTF and JKM very often are strongly correlated. And then let's say the kind of speaking about volatility, the kind of volatility and flexibility that one see these days in the European market is not there yet. Let's say in the intraday, which is still very thin in Japan, or in the balancing market. But let's say with roughly 80 gigawatt of installed SPV and increasing wind, we do expect that this is a matter of time, but things are moving. So we see, speaking with different kind of customers, also interest in jumping in, they say, to get a piece of the cake, let's say like that, in order to profit from, the kind of opportunities that are there, especially in the very short term of the curve.
Yeah, interesting. Yeah, I think a couple of my clients that are quite prominent in the intraday market said it feels a little, the liberalization feels a bit like the liberalization in 20 years ago in Europe.
Exactly.
So they're, placing a bet that it'll go obviously similar in the future, and they want to get in early and get a presence over there. There's also benefits of having presence over there. Yes, you trade Japan, but also you can trade the night shift in Europe. So that's what I
Definitely.
see. A lot of the reasons why Singapore mainly I'm seeing as the big hub, but also Hong Kong is being looked at as well for those reasons.
Yeah, and again, the market is still kind of regulated. Also in terms
Yeah.
of transparency, for example, we don't have access to data that for us are kind of obvious in the European market, but
Yeah.
we do sense that the things are moving toward the right direction. So we are putting in place as much as possible loaders from all the publicly available pages. In terms of maturity of the, for example, of the shorter market, the future market has been growing exponentially during this 2024, and let's say the spot is opening up. I think that also the intraday market, which for now is still very thin, will grow further. I mean, there would be the need to grow further because, again, one main driver here is that a huge, let's say, portion of the supplier these days are guaranteed with a feed-in tariff, and therefore they are not even exposed, let's say, to any imbalance price. Those you don't have the interest or why should you care of changing your position or balancing your portfolio or your unit? You don't. Therefore, also the need of the intraday market seems less relevant, right? But we do think that given the enormous penetration of the renewables, we do expect that this is going to change in the years to come. And with a more active balancing market, we would see also an increase in volumes and activity also in the intraday market.
Yeah. Okay, that's interesting. So still early days on intraday, but in the future market, that's quite an active market already. Is that fair to say? Or
It has been
there's a
growing.
bigger opportunity there today than the growth?
It has been growing. It's still, of course, is not at the level of some of the major European markets, but also in Europe, right? Some of the markets have been developing later compared to others. Germany, of course, is the reference hub, but there are different paces. And definitely the numbers show that there has been an increasing activity in the future market, absolutely, during 2024. And we would expect the same also on the short term of the curve. It's a very interesting market, I have to say. There are the zones that basically represent the area of the transmission system operators. And of course, depending on where the residual load might drop more or less due to the increase of installation in one area or the other, we might see also going forward an opening up of certain spreads, especially in delivery. But at the moment, you can trade in the future market only two macro zone, let's say like that. But in the future, we would expect that this market will resemble more and more, for example, a Nordic market here in Europe or an Italian market, meaning having these zonal prices and the system price. It's very interesting to follow, let's say like that.
Yeah, no, it's interesting you just said that, because what I was going to ask, are there any parallels with any European markets? I know they're all individual and have their own nuances, but do you see any parallels with any of them? And you mentioned Nordics there.
The Nordics and Italy, definitely. Yeah.
In Italy, okay. And for my benefit, what's the reason? What's the parallels that you see there?
Well, basically, the choice of how you want to shape, let's say, like that, your market design in a country depends on different kind of decision. The very unique thing of the Japanese market is that part of the country is in a frequency of 60 hertz, and the rest is 50 hertz. And other than that, there are kind of bottleneck in the grids, both on the 50 hertz side and the 60 hertz sides, that basically define the best market design with the zonal market design, which is in Europe adopted only by the Nordics and Italy. And when I was young, really very young, I recall that in Italy, they were also discussing which kind of market design should we copy, beginning of the 2000s. And at the end, they decided to copy the Nordics because of the bottlenecks and the geography and the topology of the grid. And I think that in Japan, the situation is different, but similar in this sense, meaning there are several bottlenecks that they want to identify in terms of the price signal through a zonal market.
Interesting. Thanks for that. Really good to learn personally a bit more about Japan because, as I said earlier, there's definitely a trend. A lot of people, Japan is the new one of the growth areas. The US and Japan is what I see from the European firms time and time again. So yeah, it's interesting going into 2025. How that market shapes up. But yeah, look, Silvia, thank you for that. It's been really interesting to get an overview of 2024 so far, going into obviously the outlook for the winter in Europe. Super interesting. Hopefully that's going to be useful for a lot of the audience, and then to find out more about Japan. So yeah, appreciate your time, Silvia.
Thank you so much for inviting me, and it was fun, this chat with you. Bye-bye.
Awesome.